Have you ever looked at people who invest in stocks and wondered, what do they really know that I don't? Most people stay away from the stock market because it feels complicated, risky, or only for experts. But the truth is simple. Stocks are one of the most powerful tools ordinary people use to build wealth quietly over time. And today, I'm going to explain stocks in the simplest way possible. This is Finance Builder, and in the next few minutes, I'll break down what a stock actually is, how the stock market works, why companies offer shares, how investors make money in stocks, how you can start investing the right way, and why avoiding stocks might be the biggest financial mistake you're making. Let's get straight to the point. What exactly is a stock? A stock is not just a digital number on your screen. A stock is ownership. When you buy a stock, you own a piece of that company, even if it's a tiny piece. If the company grows, your ownership becomes more valuable. If the company profits, you may earn dividends. If the company expands, your investment benefits. Think of it this way. If a bakery has 100 shares, and you buy 1 share, you now own 1% of that bakery. If the bakery becomes more profitable, your 1% stake increases in value. That's exactly how stocks work, just on a larger scale with companies like Apple, Tesla, Amazon, or Coca-Cola. How the stock market actually works. The stock market is simply a marketplace, like Amazon, but instead of buying products, people buy and sell pieces of businesses. It's a system where companies list their shares, investors buy and sell those shares, and prices go up or down based on demand, performance, and expectations. Nothing mysterious. The price of a stock rises when more people want to buy it than sell it, and it falls when more people want to sell it than buy it. Supply and demand, that's the core. Why companies offer shares? You might wonder, why do companies even sell their ownership? Because they need capital, money, to grow. Companies offer shares to build new products, enter new markets, hire more talent, expand operations, scale faster than their competitors. You invest money, they use that money to grow. If they grow successfully, you earn returns. It's a win-win model, when done right. How investors make money in stocks? There are primarily 2 ways. 1, capital appreciation, price goes up. You buy a stock at $100, company performs well, stock goes to $150. You made a $50 profit. Simple. 2, dividends, profit sharing. Some companies pay you a portion of their profits just because you own their stock. It's like getting a small paycheck for being part owner. Why people become rich through stocks? Not because stocks are magical, but because time plus consistency plus growth creates compounding. When a company reinvests profits and continues to grow year after year, your investment compounds automatically. This is how long-term investors build life-changing wealth. That's the real power of the stock market. Why most people avoid stocks and why they're wrong. People avoid stocks because of fear of losing money, lack of understanding, bad experiences of others, market volatility, confusing financial jargon. But avoiding stocks completely means missing out on compounding, missing out on wealth growth, relying only on salary, staying behind inflation, keeping money idle instead of productive. Successful people understand money needs to be working, not waiting. How you can start investing. You don't need a finance degree. You don't need thousands of dollars. You just need a simple, practical approach. Step 1. Choose a reliable brokerage. Robinhood, Fidelity, Schwab, TD Ameritrade. Pick any trusted platform. Step 2. Start with companies you understand. If you use the product daily, that's a good starting point. Step 3. Invest consistently. Even small amounts grow over time. $10, $20, $50. Start anywhere. Step 4. Don't chase quick riches. Stocks are not a lottery. They are a long-term wealth builder. Step 5. Avoid panic selling. Markets rise and fall. That's normal. Stay consistent. The smart way to build wealth with stocks. Here's the investing formula I recommend for beginners. 1. Long-term mindset. Think in years, not weeks. 2. Diversification. Don't put all your money into one stock. 3. Index funds. Beginner-friendly. If you don't want to pick individual stocks, invest in S&P 500 index funds, total market index funds. These automatically invest your money across hundreds of strong companies. 4. Dollar cost averaging. Invest the same amount regularly. It reduces risk and builds discipline. Why learning stocks is better than avoiding them. Stocks are not just investments, they're financial skills. When you understand stocks, you understand how companies grow, how wealth compounds, how markets work, and how financial freedom is built. Ignoring stocks means ignoring one of the most powerful wealth-building tools available today. Knowledge is the most important investment you can make. Stocks aren't complicated. They're simply a way to own a piece of the world's best companies and grow with them. And now that you understand the basics, you're no longer on the outside looking in. You're ready to take your first step. This is Finance Builder, helping you learn money the simplest way possible. If you want more clear, beginner-friendly financial lessons, you know what to do. See you in the next video.